All right. I don't know if you guys can hear me. Hopefully you can. Please let me know. Yes. Okay. Good. Thank you. All right. So where was I? Yeah. Let's go back here. Let's go to unemployment rate. So unemployment rate in Sweden spiked to 10%. All right. And then you look at Taiwan. Don't worry, I'm going to give you other examples, but I'm just let's get through this one first. All right. Look at unemployment rate, 3%. It spiked to 4.1 ish, 2. Big deal. Right. So what's better? To ignore COVID and say, well, it's the economy is more important. I'm just going to not lock down and, I'm just going to plow through this. Or, hey, we have a problem. Let's deal with COVID first, and then we can. That's going to fix the economy, right? You don't have to worry about the economy if you fix COVID. So which one works better? Clearly, dealing with it, right? That's the most important part. Well, what I got more examples. Let's take South Korea, right? We're going to compare South Korea to Brazil. Unemployment rate barely budged, barely budged. They had conducted 130,000 tests when the U.S., with 340 million people, only had conducted 2,500. Think about that. And that was in March 16th we were talking about. Okay, not January. What did their GDP do? Dropped 2.7%. Whoop-de fucking do. What about Brazil? And I'm kind of repeating this for some of the guys who've been here. You've heard this story before, but for the new people, this is important because you're going to go vote. And, RealMacro is not about just trading and investing. You want to understand why you're doing what you're doing, right? How should you vote? How should you, forget about what my vague hunches and feelings are. Forget about that. Okay? I don't like Trump. I've made that clear in the beginning. Okay? Doesn't mean that you don't support some of the policies like, going into a trade war with China. It was the right thing to do in my view, right? But I didn't know the guy is fucking retarded. He botched it. We were better off if he would have just kept his mouth shut. Okay, but again, since COVID, guy's done. He's finished. Even with China trade wars, he was finished. But anyway, on my book. Independent of that, I look at the math, facts, and data. Brazil, unemployment rate going to 15%. Okay, they started from a high level, obviously, right? 8%, but still, it's up double. Double. What about GDP growth? Well, the economy is more important. Bang, 11.4% down, right? So if you think not locking down is going to create economic growth and your business is going to be great, you're sadly mistaken. Sadly mistaken. There's no evidence to support that idea other than it intuitively makes sense. Okay? So when you guys go and vote, and I know some of you guys are international, so don't worry about that. But you know what I'm saying. You can see it from a better perspective. Okay? Disaster. Anyway. All right. Keeps grinding lower. And the lower it goes, the more it finds acceptance in price. Right? The more it finds, and now it's about to go. Because this is neckline. Right? So it's got to put up or shut up. right down here somewhere. So let's take a look at it. Let's see what's going on. So people are sitting here, they're worrying about Hunter Biden, who's not even going for president. They're worrying about some corruption bullshit. Every politician is corrupt. What is that, newsflash? Please, give me a break. And yet, they're bamboozling people into cheering for their own economic demise. It's it's amazing to me. It boggles my mind, and it bothers me. It bothers me because it's not what's best for people. So I will put it out there. Not that anybody gives a shit what I think, but the data is the data. Deal with COVID. If lockdown is part of the tools, then lockdown is part of the tools. All right. Let's mark this as a short. I'm not. Again, this is not a trading signal. You can easily get a head test. Okay. But we're just doing this for marking purposes. This would be considered shorting in the hole. Why? Because if this bounces, some tweet comes out, I don't know, whatever. This bounces, you're screwed. How are you going to hold it? You're going to puke it up. And that would be a short covering rally, right? But it's right at that trend line, right at breaking that bigger channel into incredibly bearish. Um, Take a look at the VIX while this is happening. And again, the VIX on a short-term basis, it's okay to use. To make big predictions on small things is not correct. So that's fine. NYSE is pushing towards the downside. Remember, don't let your eyes be deceiving you. Okay? What is it in percentage terms to come down here? It's another 0.5%. Very doable. 1 second, I'll be right back. I'll leave you with this screen. I'll be right back.
Mic off. Mic on.
Okay, I'm back with you. Sorry about that. Rabbit hole for what? I'm not sure what you're asking. Now, normally, when it's down 2.4 at support, I would not be looking for further downside, and uh, it's not something that you typically do because it's an extreme, right? But again, when you look at the environment, the macroeconomics, the message of the market, um, you look for more downside. I certainly would not initiate a short here. Again, that would be shorting in the hole. All right, let's take a look at the market internals for the day and then for the 5 days. All right, so for the day, S&P is down 2%. S&P Energy is leading, if you can imagine that. Materials and financials, so clearly not a bullish day. What's lagging? Consumer discretionary and information technology and real estate. This is not the kind of internals that you want to be seeing. And it's not the one day, right? We've been doing this now every single day. So we have a memory of what's going on internally, right? Nothing is showing positive, nothing. 5 days, down 6%. And remember, I told you in the morning, 7% is the max, right, for the week. We were at 4 something or 5, I'm not sure. But pay attention to these things, right? They matter. So what's leading? Utilities, communication, and materials, not what you want to be leading. And lagging, industrials, technology, financials. So what we're trying to do here now, from from looking at this, and perhaps I should do it a little bit better, so we can have more context. It's 9 o'clock from yesterday was somewhere 9:30, somewhere here, somewhere in here. Got the fuckery move, whatever. We got everything. Okay, so we're at the new point of control for the past 2 days, and here's the price level, and it abruptly ends, right? So now what we need to do is explore this area right in here, just like yesterday. This needs to be explored and then possibly bounce back up again towards that support area. This looks very nubbed, right? All right, let's take a look at the earnings yield. Let me refresh. All right, 3.06. Now, before all this craziness, anytime the earnings yield would fall below 4%, it usually signaled some kind of a top, or I should say a short-term correction. Now we're finding acceptance at 3 and even less than 3%. Why? Because the 10-year has fallen so much. Okay, that's why. Previously, uh, the bond rate was about 2.5, whatever percent, something like that. So you would see that every time it went below 4, it would bounce 475, 450, and then it would go back down towards 3, and then it would bounce. Okay, but the earnings were rising, and that's why the price kept going up. Now, in here, in euphoric land, that's the wrong chart, but come on. And here in euphoric land, right in here, okay, it was at the low fours. And the bonds kept falling. And I remember Logan Mohtashami, the scam artist. Oh, this met my target. Yeah, it's going to be in a sideways range. And, 165 is, I think he started at 2. Yeah, 2 was my target. Then it was 165. And then it was like, 110. And that's capitulation. And like talking about the craziest thing. And I was asking him, I'm like, what range are you talking about? What are you? I had no clue what he was saying. So look at it today. Crazy. Guy was crazy. He still is crazy. All right. So wedge. It's not. It didn't break the neckline. So now you got to start saying, okay, what is it doing? What's it trying to do, and how good of a job is it doing? And it's trying to fall apart. It keeps coming back up. Okay, so now what? Well, now we have a ABC. There you go. All right. So if this breaks, look for the next move up. So remember, bare knuckle charting is about um, finding the good risk rewards. Okay, it's not about telling the market what to do. It's not about coming up with cute stories and applying it after the fact with many, 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 many examples. All right. So in this example, it's a 1 minute, whatever. Let's pretend that we're just looking at a chart now. If the market was in an uptrend, everything is relatively good. It's a normal market. Nobody's even talking about it. What is the risk reward? The risk reward is you want to see that price comes up, does something like this, and then shoots up. Right? That's what you would be looking for in a bull market. In a bear market, it's not what you look for. You're looking for a break that's going to fail. Fuckery move, right? Doesn't mean that it can't bottom here or whatever, but that's what you would be looking for. So if you were to take a trade here to the long side, going against the fundamentals, against the trend, against all these things, you can take it. You can take the trade. There's nothing wrong with that. It's a good risk reward, okay? But you got to be very quick on your profits. What if you are short? Would you allow this, if this broke, to stop yourself out? No, absolutely not. It's not big of a structure for you to say, oh, okay, the movie's over. No, don't do that. Okay. Now again, it depends on your trading strategy, your portfolio. There's many other factors that go into it. That's why trading signals never work. Okay, they never work. They're always going to tell you, whoever the host is, oh, you didn't buy enough, or you didn't buy when I did, or you didn't get out when I did, you didn't sell enough when I did, you didn't buy these other 10 stocks that I recommended out of the 100. Now, to my subscribers, friends, I have to do that so they can see how it all works, right? But I don't do it as a trading signal. I do it as a I'm doing it anyway, so hold me accountable. If I can't do it, then why am I teaching it? Why am I talking? All right. So, we're still below the structure. So far doing a bad job of going incredibly bearish. We talked about the limp tick this morning, right? Where it just kind of accelerates to the downside. All the stars are aligned for such a move. We're expecting that move on the small time frame of the head and shoulders. So when would I consider stopping out if I was short? Above this trend line. If this starts to break, then you want to stop out. Our target for today, well, not today, but today, tomorrow, not tomorrow, Monday, is that price will ultimately resolve itself down to 1060-ish. All right. Now that's a tall task from here because it's another 2.5% down. That's a lot. I don't think it will happen in the last 56 minutes. 304. Take a look at Dow Jones 1.65, S&P 1.2, Nasdaq 2.5, small caps 1.1, transportation's 0.8, the FANG's down 3.4, a lot of stagnation. Jets 0.6, China 1.1, emerging markets 1.2 to 1.6. Japan, Australia, Nifty, Japan and Australia about a 1%, and Nifty 50 still holding up, surprisingly. 0.24 down. Interesting. See, what I think is happening with India is that for them a break is a much bigger deal than for everybody else. So they're holding it up. If this breaks, you know, down you go. That's a very big break of a very big structure. So they're waiting to see what the rest of the market is going to do before they break it. If everybody else, capitulates, they're going down with it. All right. Dead at 305. That's bad. Why? It's building pressure. When it's quiet like this, it's building that pressure back and forth and back and forth and back and forth and back and forth. Eventually, you're going to get some kind of resolution. And it's going to be a thrusty kind of move. It's not going to be one of these. I don't like thrusty moves because, again, they're there to. It's price is advertisement, right? So it's there to invoke emotion. The slow, grindy thing is what puts people to sleep and gives them that hope that now it's going to turn, now it's going to turn, now it's going to turn, right? And before you know, you're down 2%, 3%, 4%, 5%, and you're still smoking that hopium crack pipe. And then, at some point you start saying to yourself, well, fuck it, I'm gonna double down. And then you double down. And then it goes lower. Okay, now this has to be the bottom. Double down again. Keeps going lower. Keeps grinding slowly. Then you get up from your couch or wherever you're sitting from, you're like, fuck, I'm down so big. Right? And then the next thing you know, you're like, fuck it, I don't care if I blow my account out. I'm so deep into this, I'm holding, it's going to bounce. And what does it do? Go lower, and then the next thing you go, margin call. I got the shirt, I know. And every time that happened, every time I said, I'm not going to do that again. I'm not going to do that again. I'm going to be disciplined. I'm going to do 700 push-ups, go out 4 o'clock in the morning naked after I take a cold shower. And no, fuck it. A hot shower so I can feel the cold. Have icicles hanging from my nipples. I'm going to be disciplined. I'm going to be strong. Mental game. Yeah. The only people that need mental game are the people that don't understand what the hell. Sorry, what the hell they're doing. Any questions, anybody? Let's take a look at the TSA numbers. It popped a little bit today, 800,000. That's not bad. But clearly, there has been some improvement for sure. But the recovery is extremely slow. It's the rate of recovery is slowing. Usually, when you get a 2 million last year, you'll get about 700,000. So the fact we got 800,000 is actually quite good. But again, the rate of improvement in passengers is not there. I know there's a campaign in airlines. Hey, flying is healthy. Hey, the air quality. Hey, and they are. Don't get me wrong, they are. But I think they're missing the point. If you don't have a job, if you're fearful of your job and you don't have money, you're not going to fly. I don't care how safe it is. All right? I don't care how safe it is, you're not going to fly. That's the socioeconomic impact. So, if they're targeting the audience that are in betweenies, that are just not flying, they have the money, they're just not flying because they think it's bad, different story. Then they're doing the right thing. Again, the biggest problem with flying is not the air quality or anything like that. It's the toilets, right? When you go in the toilet. So how do you remedy that? Simple. rapid testing. Make sure that everybody gets, before they get on the airplane, they don't have COVID. The other part that people don't consider, let's make this a stop out just for the hell of it. Again, it's an artificial trade. It's just marking of what we think is going to happen next. The other aspect of it is you don't want bodies to be flying from one continent to the other, one state to the other, in case they do have COVID. You may not catch COVID on the airplane, okay, fair enough. But once you get off of it, if you are a carrier, then you're going to start to infect other people in that city. You don't want people from Wuhan, infecting people in Shenzhen or something, or Sichuan. Again, can't be oversimplistic about things. You got to look at them from all perspectives. And sometimes we don't even know what all perspectives are. All right, 312, nothing's going on in the markets. A little bit of improvement in the Nasdaq and the S&P. What's the VIX doing? A little bit of improvement in the VIX. At this point, it doesn't matter how close you are in analyzing the volume profile because we know where the point of control is in 2 days, right? Versus 1 day, we know where it is. So it doesn't matter. Any questions, anybody? All right. All right, there it goes. Breaking out. All right, so that's stopped out. He continues to break higher. S&P now less than 1%. Let's take a look at the FANGs. New lows for Facebook. Amazon, forget about. Apple, incredibly bearish. Netflix, going incredibly bearish. I don't see how the market is not going to tank, honestly. Google, after going up 10%, right? And after hours, it's now up 3.2%. Nvidia incredibly bearish. Tesla collapsed. So I don't, again, I don't see how this is not going to resolve to the downside. Microsoft is still holding this head and shoulders. I don't know why, for some reason, it's not in the FANGs. It was there before. Is it somewhere else? I'm not sure. I don't know. Let's look at ExxonMobil because we've been talking about that lately. All right, continues to go lower to test the previous low. It still has some ways to go. From where we are, it's got another 7%-ish to test the previous low. That's for subscribers. The trades that I do are for subscribers. Yeah, so if you subscribe, first of all, you have access to me 24/7 because we have a live chat. Two, you'll get to see my trades. I don't announce them here. The ones that I mark here is just for demonstration purposes, not trading. That was not a trade that I took. And then you get a lot more in-depth analysis. Again, this is, I don't want to call it trade. It's more mentoring than it is teaching. I used to teach in the beginning. I used to only teach. The problem with only teaching is that you have to be very strict about what you're saying, and people cannot diverge from what I am teaching. The second problem is that it takes a long time. You're not going to come in 1 week. You'll be a professional trader. Oh, let me go out. Blah blah blah. Quit your day job. We're all going to be rich. My idea initially was that I would train a group of guys And then they would go out and teach it themselves, because believe me, when you teach something, you learn a lot from it. When you have skin in the game, it's not the same thing as trading in your, you know, in your home. When everything is public and everybody can see every single trade you make, it's like masturbation, right? It's a lot of fun doing it. You just don't want nobody watching. So it becomes it's a whole new different world, and it makes you better because you won't take stupid trades. You won't make trades like I made money today. Fuck it, I'm just going to take this trade. I don't give a shit. I think it's going to do this, and then before you know it, a fun trade turns into a disaster. And for some reason, as humans, we value credibility more than money. It's crazy, I know, but you won't take certain trades because you'll embarrass yourself, and that will stop you from doing stupid things. So that was the original plan, and then I turned it more into mentoring, where people can just post what they like. Because honestly, the guys that have been with me, a lot of them have gotten really good. So some of their charts matter. I find benefit in it. And then you get those guys who come in, they pay their 66 cents a day, and they start talking about their crazy shit. Nothing to do with bare knuckle charting, nothing to do with real macro. I took this trade and I made money on it, yeah. And it's like, no, no, no. There's a rule. Calm down there, big guy. You can talk about a trade once you announce it when you take the trade. Then you can talk about it all you want. Okay? After the fact, I'm the champion of champions. No, I don't want to hear. Thank you. That we're not interested in. But you'll be surprised how many people want to come in and start talking their game. They pay 66 cents a day so they can talk their nonsense that nobody wants to hear. All right. So it's 324. Nothing in the markets. Just going sideways. Broke out. Not very convincingly. Back to the point of control. It's funny when you ask those people and you say, "Can you please produce a chart?" And oh, I don't know that stuff. Okay, so why are you here? If you're not here to learn, why are you here? To learn. Oh, okay, so show me something. Make an attempt. I don't know. Get some crayons. Start drawing. People like to troll. And you can always tell the trolls because they always have some weird fake uh, Facebook account. Not always. Typically. All right, right back down we go. You see, when you get into these situations, how do I view the price action? That every time it rises, it's just looking for price, for people to buy it or sell it. And in this situation, every time he looks for some new buyers and sellers, it's only to set them up for the next drop. And then another pop, and then sells. And then another pop, and then sells. And then eventually it falls apart. And that's what elliptic formation is, essentially. that the upside buyers become less and less and less and less, and the sellers become more and more and more and more, and then you end up in a situation where you go like this. And then at some point you're going to find buyers, and then you'll get the thrust move up. And the whole entire structure of elliptic with the correction, what is that? All that is just price advertisement. It's marketing. That's it. And that's why I don't like thrusty moves to the downside. Like watching paint dry. It's one of those things. When you look at this chart pattern, right? What is it? If they don't scare you out, they're going to wear you out, right? Remember, 90% of the time, the market just goes sideways, right? And the problem with that is, for new bare knuckle chartists, what they tend to do is overanalyze. Okay, it's one thing to do it to identify a chart pattern or a structure and identify risk rewards. Okay, on a small time frame, that's one thing. But they actually trade it. So they become myopic. They don't look at the big picture. They don't do the proper analysis of starting with a monthly, weekly, daily, 4 hour, 1 hour, and then work their way down to 1 minute. They don't look at the message of the market. They only look at price. They start to identify certain patterns. They feel confident, and then they start taking the trades, and then they get whipsawed out, and they overtrade, and they screw themselves. These are common mistakes. Don't make these kind of mistakes. If you're going to open up a simulated account and practice what I do here, you want to be successful for a year. All right? If you can prove over a course of a year that you have more wins than losses, or better yet, that's wrong, that you have more money than you have lost, then you can go and start, playing with it. Why do I say more money than wins? Because you can. I've had 7 losses and 1 win, and it's made up for the year. It's not about the number of trades. That's the 7-to-1 rule. What good is it if you're going to be right 7 times and then on your one trade you blow out your account? Right? That doesn't make sense. So the other approach people do, I'm going to diversify. I'm going to buy a whole bunch of stocks all over the place. I like this one and this one and this one and this one, and it's all usually within the same day in the same couple of hours. And they call it diversification, not realizing that stocks typically do what the market does, right? In fact, if you're a stock picker, you end up underperforming the S&P and all the indexes. I remember I used to read like a Buffett style book. Man, after I was done, next day I had the hard on to go to go out and be a value investor. in the bull market. Yes, I'm looking for value. I want something with a PE of 3. No, make it 2. And I like this one and this one and this one, and I'll take the one in the back. Next thing I know, they were all value traps. Market is going straight up, and I'm losing my ass. I'm telling you, man, the info that you guys are getting here is with a lot of blood, sweat, and tears. Mostly tears and blood. All right, 332. Right back down. Back into structure, right? You see it? Broke out. Get right back into structure. So what are you seeing? Lower high, lower high, lower high. This should have produced a thrust move to the upside under normal circumstances. Didn't do it. Remember I was telling you that every time it goes up, all I think about it's a fuckery move and it's going to go back down? Magic. You guys see this, right? 1, 2, 3 up. I'll put on a little bit of music because I'm going to fall asleep.
Mic off. Mic on.
Alright, so continues on down. Broke the structure, megaphone. It's the same pattern, right? Breaks out, fails, goes down. Fuckery move. Only the fuckery moves are becoming smaller and smaller and smaller and smaller, right? Alright, down 2.64 for the day in the NASDAQ, S&P down 1.3. Dow Jones 1.67. New York Stock Exchange 146. And the FANGs, they're still holding there at 3.67. Remember how I said earlier today that we needed to explore this a little bit. This needs to be explored down here, right? And in doing so, he breaks the head and shoulders. So this structure is no longer valid, the falling wedge. Quickly, let's just cover a little bit the head and shoulders. The fact that it came back up to test the right shoulder doesn't negate the head and shoulders. Neither would a head test. Comes up, tests the head, and then fails. Let me show you an example of that. This is the right shoulder, purple. And let me do this one. Right, see it here? So you had a head and shoulders, came back, broke the head test, but you're not worried about this one, right? The head test you're worried about is this one, up top here. So price came all the way up, head tested, and then boom, the world came to an end. Okay? So be mindful of that. The next thing I want to tell you about head and shoulders is that they occur typically at tops. You see, when you look at it from this perspective, you're like, yeah, but that's not when it was identified, right? So right shoulder, head. Try to be a little bit more precise. Okay, this was the head and shoulders. Then you got the head test, and the whole thing failed. All right. Now the fact that this is at the top makes it a potential reversal. Okay. Now, if you're going to see head and shoulders as it's rising, I think I talked about this before, okay? This is not a reversal if it's in an uptrend within a structure, okay? And then it continues up. It's just a pause. That's all it is. And then maybe get a double top, and then it goes up, and and so forth. All right. Same thing to the downside. Comes down, head and shoulders, continues down. Does whatever it does, then continues down. When you start to see a whole bunch of head and shoulders, that's really bad. And it won't be on one chart either. Head and shoulders here. Head and shoulders here, failed. Head and shoulders. Okay, went up, tested, and then collapsed. The entire thing is a head and shoulders. Right? That's not a healthy market. Markets don't behave like this when they're going up. All right. Of course, you gotta be chilled, homie. Gotta be chilled when you're trading. No emotions. Let the data tell you what's going on. 3:44. 16 minutes left for the week. Expansion, another megaphone. Let's see where this goes. See, here's another good example of a head and shoulders. Left shoulder, head, possible, not confirmed, right shoulder. So then you would have one head and shoulders, two head and shoulders. Well, that's going lower. We're not there yet, but I'm just saying. Right back to the point of control. Again, notice how this is so nubbed. Right? And then it goes. This doesn't even look right. You need to fill this area. You need to explore that area. See, they're keeping it from exploring because they know that's going to lead to a. I don't want to say they. That's not correct. But the market understands that if that breaks, we're going a lot lower very quickly. It's not they. It's not 6 people sitting there pushing buttons. Dump it. Any questions? Anybody? The fiscal support is bullish. Wrong. What a clown that guy is, Mike Norman. We have 90 billion of fiscal support. Wow. Then you have Colin Roach. Oh, market is going up. What technical analysis? It doesn't work. No, it doesn't work. No, the market is not going up because of liquidity. No. Really? How come when you get a stimulus and there's no QE, market stalls out and starts dumping? Or dumping? Magic. See, people that don't understand, they can't make judgments. Understand it first, learn it properly, and then if you understand it, then you can debunk why certain things don't happen. Different story. Have at it. Pseudo intellectuals with a lot of opinions, a lot of answers, but no questions.
Mic off. Mic on.
All right. So another 10 minutes left to go in the session. I'm just going to glance real quickly through everything. So this is a good example of a limp tick. See it? Can you chart this? I'll give you a minute. See if you can chart that. Minute's up. That's one, the bigger structure. And then you have this. The. Either or is just as good. Alright, fangs are pushing to the low. Alright, so far it's a dud. Okay, big ass dud. 7 minutes to go. Remember, that last 3 minutes, it gets crazy. Five minutes left to go. I wish I could come up with something more creative and funny to say. I can't play hardly any content because it's copyrighted. I don't want to get a violation. It was fun in the old days. I could just grab content all over the place, place it up there, make funny videos. I used to enjoy that. Now, everything you do, oh, it's copyrighted. Oh, you didn't say something nice. push back up. All right. Last minute of the trading day. Short covering. Yep. There it goes. All right. So that did ultimately play out, huh? Look at that. So going into open territory. Been here before. Void. So again, what's it trying to do? Go lower. How good of a job is it doing going lower? Not very. What's the result? That at some point, that pressure that's building down there is going to resolve. Right? One way or another, it's going to resolve. Boom. Straight up. It could have easily went down. Oops. All right, 4 o'clock. All right, guys. That's it. Let's just take one final look at everything. We're going to look at it on a weekly, see where it's going to close for the week. Definitely an M pattern. It still has not completed to test the previous low. There's some activity up here. All right, but the point of control is much, much lower. S&P, a lot closer to completing the M pattern. Small caps are still holding up relatively well. Okay, but it is the third lower high. Dow Jones. Okay. Third lower high. Point of control here is a lot higher. Okay, it's a 24,779 on a weekly. S&P 500 we covered already. New York Stock Exchange. Okay, this is more of what I would expect a market to look like, right? It's a lower high in a corrective wave 2 up that's going to resolve to the downside. You have a double top in there, looking good for the bears. VIX, right? It's going to need some more time. All right. Might have to backfill here a little bit. So that's what we're going to look for next week. What else? Transportation we talked about, right? Just kind of rolling over here. Okay. Double top M pattern, almost at play. Fangs, double top, still has some ways to go down. All right. We can also say it's a head and shoulders. You can see it. Right, head and shoulders. So we're going to look for more downside. World Stock Market Index, M pattern at play, still not completed. Jets. All right. So that's it for that. Just let me put the moving average. way below the 63-day. I should not do that on a weekly. Below the 63-day moving average in airlines. FANGs are below it. Transportation is below it. And remember, 63 days is a quarter, so it takes about a quarter for funds to put on a position. And when it's below the 63-day, it just means they're net sellers, right? NASDAQ is below it. S&P is below it. Dow Jones is really below it. New York Stock Exchange, okay. So, the bias remains to the downside. It's that simple, even on a weekly. On the RSP, I would make an argument. Okay. 1, 2, 3. Popped. Void at the top. This will break to the downside. And remember, the RSP is the equal weighted ETF. All right. Let's take a look at the market internals for the day. Energy, flat. Financials and industrials led. Laggards, consumer discretionary, technology, and communications. So nothing bullish about this day today. S&P 500 was down 6.47% for the week. All right, that's an extreme normal. Led by utilities. That's not what you want to lead. Communications, real estate. Laggards, consumer discretionary, information technology, and industrials got an ass whooping. Okay. Again, keep these numbers in mind. That 7% is that extreme for the week. Question, testing the head. I don't know what that means. The head test, you mean? You might be watching the video in lag, and you're posting it now. So if you're asking for the head test, this is the head test here, right? It's the head test of this, right? That's normal. It can do that, and then it fails. Another way you can look at head tests are like this. Okay, that it's a 1, 2, 3, comes up, leaves a gap at the top, and then fails. Okay. Oops. What the fuck? So head test is it's acceptable, and again, head and shoulders at tops are potential reversals. While they're kind of in a trend. What the fuck? All right, let's see if we can do this again. So if it's in, let's pull up. Let's find a head and shoulders. Like here's a perfect example. So you're recovering, you have a correction, and it comes up, fails, okay, and then it comes back up. You see, the market is not falling apart. Okay, it's just a continuation. Yes, it's at the previous high. Yes, it's having some difficulties. And then what typically results from that is it comes up, head test, but it doesn't fail. It continues. Okay? So that's what I mean. Can this be one of these situations where you have a 1, 2, 3 down, it creates a structure like this, and then shoots off to the moon? Absolutely, sure. I don't have a problem with that. Okay, but as far as head and shoulders, and again, this is a daily, but if you go to smaller time frames, You'll see head and shoulders, but it's just a continuation. It's the same thing as a 1, 2, 3, and then a continuation. And then you get a bear flag, right? And then a continuation. All right. I hope that makes a little bit of sense. What else was NAS? You're talking about the 1 minute one? This one? Is this a head test? Is that what you're asking? Yes, this is a head test. Definitely, yeah. Remember, the structure is not necessary. Yeah, good. That's a good observation. Very good. When you were looking at structures, we're looking at risk rewards. That's what we're interested in. Sure, there's some indication of what's likely to come next, right? Especially again in a thrust down move. Yeah, let me show you. Like if you go back in time. You had a head and shoulder, broke. Head and shoulders, broke. 1, 2, 3 double top, broke. Megaphone, broke. Fuckery move, counter trend, rally within thing, broke. 1, 2, 3 down, holding. Okay. The structures are just there to give you good risk rewards. That's it. Okay. But all these structures are occurring within the context of a channel. Okay? It's within the context of a channel. So you know what the direction is. You know what the bias is already. Any other questions? Cold therapy is brutal. Yeah, that guy, he's special. And he's so proud of it. I did 700 push-ups. Starchidium, as we say in Greek. Who gives a fuck? Bravo for you, my friend. I jerked off 700 times. You know, when you don't know what you're doing, you have to come up with something that's going to make you appear to be very intelligent, very accurate, very disciplined, very in the know, in command. You're a figure, okay? Because you're trying to cover up what you don't know. And that's why these people do these things. My target, my 6-point model, my crystal ball, my 255,000 predictions that 3 came out right. Let's focus on the 3, forget about the other 250,000. And it's easy to spot once you know, you've been through so many people that you've looked at for potential learning. You start to figure out they're full of shit. And you can spot it immediately. We have this guy now, he's a bond king. Bond king. He's telling you, well, you know, this report and look at this one, if you compare this to this and that to that. First of all, nobody understands what he's talking about. Second of all, he's selling cute stories based on randomness. Right? If you can find 2 charts that correlate, then that means something, and if that means something, then that means something else, and that it's like, dude, what are you talking about? And then he ends up wrong, and then he starts talking about, well, I'm not wrong. It's coming. I'm just too early. You know, it's the same thing. I don't know how these people. They're good. They're good at talking. They're good in the marketing. I'm not, but they're excellent, and I applaud them for that. I wish I had their skills. I really do. Anyway, all right, Habibis. Thank you very much. Another good, successful week. calling the markets. Don't forget patreon.com/RealMacro. Come on down, subscribe. All right, 24 hours, 7 days a week, live chat, access to me and my fellow subscribers. I didn't account for the market. Yeah, exactly. Yeah, I didn't count on that $4 trillion being pumped into the market by deficits and another $4 trillion in QE. Oh, stupid me. Yeah, I own that. I should have known better. So, yeah, patreon.com/RealMacro. Come on down, subscribe. If you want to support me, you can join for $5. You won't have live access. Okay, that's only for the full subscription. All right, guys, have a great weekend. I'm going to make some videos probably this week. I got to finish off the international of my building an economy from scratch. If you haven't seen those videos, please go back and look at them. You'll understand. We'll start talking the same language. You'll understand how I view the economy, and that's very important in conjunction with these live videos. Even though this is bare knuckle charting, you'll understand the macro behind it. Okay, and then we can talk the same language. Again, it's not only about trading and investing. It's also about having good understanding about economics, because now, look, everybody's going to go out and vote, and they think that Trump tax cuts are what they're going to vote for. But in reality, that's bullshit. He's lying, because if he's not going to bail out the states and the cities because they're so badly run, right? Well, what's going to happen to your state and local government taxes? They're going to go up. And then he's going to say, well, it's not me. It's just they're poorly run. It's not my problem. Right? So people don't realize that. They think that the government can just print money and it's good. It's good. We can just print. Right? All those Tea Party and, well, Trump is doing it. It's Republican. It's okay now. Gold is not real money suddenly. It's amazing how people change their minds in 10 years based on politics. Amazing. It's crazy. But the reality is that there's no free lunch. Okay, taxes will have to go up. The deficits that were hidden in loans from the Fed that are now going to be forgiven, right? Well, what's that going to do to the deficit? Who's forgiving it? The government, right? So what's going to happen to deficits? They're going to go higher. Well, is that good for the dollar? No. And plus, you're going to have another stimulus, and then another one. See, the stimulus are fine, but they're short term. They last about 6 months, 8, 9, 10 months, whatever, and then they fade. And then what? Well, another stimulus. There's no long-term plan. And they're not stimulative, obviously, right? Yeah, what I'm doing now is not going to be forever. This is just to introduce it to people. It's live chats. I'll post, for example, my charts, my thoughts for the morning. I wake up, I take a look at everything, and then I'll post it, right? Well, this is not mine, but I'll post on the chats, and I'll say, all right, here's what's going on. Here's what you should look at. So any questions, bare knuckle charting and so forth. There's more to it than just the bare knuckle charting that I'm showing you now. Okay. There's a lot more, and you need that stuff. There's also some silliness in there, of course. There's other guys that understand how we do things, so you can ask them. They're there to support. But again, it's not about just trading and investing and charting and so forth. You want to understand how an economy works. You want to understand why this is not good and why this is good and where should spending be. At least have a different perspective as to whatever it is that you believe. Okay, just to look at things from a different perspective. Even that in of itself is valuable. Thank you again, and have a great weekend. Again, I'll be making some more videos, finishing it up, and head tests. We'll see what's going to happen Monday. Tuesday's the elections. It's going to be volatile, and we'll talk then. Well, what I'm doing is on a 1 minute, and if I could take it to 5 seconds, I would do it in 5 seconds. A 5 second chart. It doesn't matter. Bare knuckle charting works in all time frames. If you learn it, I use the 1 minute, of course, because I can show you so many more patterns that you wouldn't be able to see. For example, on a 30 minute, you can't see a 1 minute, right? On a weekly, what are you going to see here? On an hourly or a daily? Nothing. You're not going to see anything. You understand? This is not designed to, you're going to be quit your day job and you're going to become a millionaire. That's not what I do. This is to teach you how to understand, to contrast price with macroeconomics, right? And somewhere in between there, you're going to see, is the market wrong or is the macro wrong? Which one is it, right? And then from that, you can figure it out. Take care, Alessandro. All right, guys. Thank you very much. Take care. Talk to you soon. Bye-bye.